Joining us today, former Barclays CEO Bob Diamond, now the founding partner and CEO of Atlas Merchant Capital, joins us. Talk about this, Bob. Appreciate the time. It's good to see you again. I think it was Bill Gross yesterday who said you look at some of the long yields that caused all the trouble in March. They're just as high or maybe even higher now. Were these banks able to reduce duration, in his words? Is the situation better or not?
Yeah, I don't think it's worse than it was, 6 months ago, Carl, when we had the collapse of SVB. We recognized that part of it was higher funding costs. Part of it was mark-to-market of the Treasury portfolio. Part of it was a concern about the portfolio, in many cases, commercial real estate, and regulatory capital was affected by all of those things. So I didn't find that announcement this morning particularly surprising. I think it's kind of following the trend. There wasn't a huge jump in the ETF for regional banks, I think down around 4%. In March, the index for regionals was down quite heavily, 35%. It hasn't really recovered that much. So not a big surprise in my mind, Carl.
Yeah. So is it all about inflows now? And will that be the important data from here on out?
Yeah, listen, I think, our view, we've talked about it over the months. We feel that, the worst of people's fears of recession are probably behind us. The cyclicals are beginning to rebound, manufacturing and housing. So we've been a bit more positive on kind of a longer correction rather than a deep and dark correction. And we're starting to see some progress in the inflation numbers as well. We'll see the CPI this Thursday and see if the trend from June continues. But I think that, the important thing for me is that we all recognize the importance to our economy and to the capital markets of these smaller banks, the regional banks, the specialist banks. And one of the impacts of the takeover of SVB and First Republic by larger banks is many of the small businesses that were doing business there have already seen reduced services in terms of how many days it takes to do a foreign exchange transaction, the ability to get serious inventory financing. So I am a big believer in the importance of the regional, smaller, specialist banks and the impact that has on our capital markets and the economic recovery. So I think this is a bit of trend following from the regulators, and I hope it creates an opportunity for private capital to come into some of the stronger regional banks.
Bob, I know you're sort of dismissing the Moody's downgrade this morning, but we are seeing a pretty big impact, at least on the banks. I mean, the overall market's down. PNC, though, down 5%. They were put on a warning for a downgrade. One of the issues that was flagged was this idea of unrealized losses, which is what got SVB into trouble. Have we really figured that out, especially in an era where the Fed and some key members, including Michelle Bowman, just on Monday, is talking about multiple rate increases still needed? And even those that aren't are talking about higher for a longer period of time.
Well, sir, I absolutely agree with higher for a longer period of time. I think there's a very, very high bar for the Fed to actually reverse course, and I don't see that coming anytime soon. But I think we're there or thereabouts in terms of rates. And I think, the banks have had, many of the regional banks have had 6 months, almost 6 months, 5 months since the SVB collapse to address some of those issues. That's why I say it's unsurprising in the sense that it's followed the trend. I think it is an opportunity. There is an opportunity in the market for many of the stronger regional banks to continue to build their capital buffers, particularly around regulatory capital. But I don't see this as like a new trend, but more a continuation of what we've seen since March.